Welcome to the new lesson. In this lesson I will try to explain what is very important thing when trading. What is your mental status when trading, because if you do not act very good on the trading, you will lose money. Two things that are very important in trading based on my knowledge, what I can and based on my experience, is that you should not be greedy and you should be objective. And that means whenever you trade, do not open the trades based on your feelings, but based on your strategy. And being objective, what means is that what you see on the market, act accordingly. Not what you think the market should do, but you follow the market and act how the market reacts. Second thing, when you open the trade, if you are in profit, do not be greedy. Do not open more trades in your favor, because if you open too many trades, you will expose your trading account balance based on your possible loss, which will ultimately lead losing your account. I will open several trades to explain what means objectively trading and what means being greedy. So you can understand, we can see that I have currently opened a 1 minute time frame on the gold against US dollar, and currently this is how the market reacts. Now you can see that the market is moving down, so I will open a sell order, where I would like to show you what means being greedy. And greedy means I will open first trade with a lot size equal to 1 standard lot. I will click sell by market, and then I will watch how the market reacts, how the market moves. So I am expecting that the price will move down, which means I am expecting that the market will move in my direction to make money. If it goes against me, like in this example, the price is still currently is acting and moving against me, it's moving up. This means I will lose money. Greed happens when you are in profit, and then the market moves your in direction, starts moving even more and even more. Then you feel so happy that you would like to open even more trades, because you're expecting the market will continue to move in your direction, so you would like to catch that move and to make even more money. Why to leave everything to the market? Because you can also earn even more. Now, for example, let's say the market has moved slightly against me, but I'm still thinking that the market will move in my direction. So we can see that the price is returned back down. It's very highly probable that the market will move in my direction. It starts to move in my direction. I'm minus $19 in profit, which is very great. I'm expecting that the price will move down even more. So there is a possibility that I would like to open even more trades, sell orders to make even more money. Now let's see what happens. The market moves in my direction. That's very good. That's very good. I'm slightly in profit. Okay. Now, am I currently satisfied with this trade? I'm in profit, small profit. It was plus $1. Let's see how the market moves. Will it go in my direction? Let's wait for a minute or two. Let's see how the market reacts. I hope the market will move in my direction. When the market moves in my direction, yeah, now it's moving. That's great. So I would like to open a new order. Yeah, I would like to open with 2 lot sizes. One lot size is too small because when the price moves $9, $10, not very good profit. I would like to open more trades with the sell orders, because I would like to make more money with this trade, because whenever the price moves slightly down, I would like to earn more. $1 to $10, not very good. I would like to earn $50. Yeah, $50, $100 on $10,000 account. That's very great. That's very good profit, and that is what means being greedy. You open trades, more trades with a larger lot size, hoping that the price will go in your direction to make even more money. Yeah, now we can see how the market moves. I'm $50 in profit, which is very great. I feel happy. Yep. I think the market will move in my direction. Yeah, very close to $100. Yeah, I could open even more, one more. Why not? Sell by market. Oh, no, not money. Let's reduce the lot size to 1 lot. Sell by market. Yeah, that's very good. Now I am being greedy, very greedy. If the market turns around me, this will mean I will lose a lot of money, because I have opened 4 lot sizes, 4 standard lot sizes. Oh no, I am in minus $77, which is not very good Greed has stepped in. I'm currently in minus 125. This should go in my favor. It should go down, not against me. And we can see what happens when you become greedy. Currently, if I have left open only the first trade with a one lot, I would be in minus $17. But instead, currently I am in minus $160, which is a pretty large lot size. And we can see what's happening currently. I am in minus $125, which is not very good. Instead of being in profit for $3, we can see that here I am in minus totally with the spread is 129. This is greed. What means? The greed will increase your loss when the price goes against you. And currently I am in minus $225, which is not very good. Instead of me having smaller lot size, small number of trades open, and having $40 in minus, I am in minus for $300. The greed will eventually lead to the loss of your account balance. Having opened more trades than you can sustain, and adding more trades in your favor when the market goes in your direction will ultimately lead to losing your account, except you have a proven strategy that the price will move in your direction. Now let's go to the next lesson, and that means being objective. What means objective? And that means using a strategy that will tell you when to enter and where to enter the trade. Here on the market, I have just simply used what the market is doing right now. I have started opening sell order because I have seen the price is going down, so I have expected here that the price will continue to fall down. And the price started to move down, that's great. But I was not objective. I was not taking into the account what the market is doing in the past and what the market could do in the future. I was not being objective because I wanted to make money. And wanted to make money, so the price goes down. That was not being objective, that was being subjective, because my subjective thought was hoping that the price will go down where I will ultimately make money. But not being objective, but being subjective usually leads that you will lose money because, like I am currently doing, I am in minus for $340. Being objective is very good because you are not putting the feelings in your trading. I have put my hopes that I will make even more money, and then my greed, which is also one of the feelings I have stepped in, so I have increased the lot size and I have opened more trades. I have opened 2 more trades, first with the 2 lot sizes, third with the 1 lot size because I could not open larger lot sizes. The trading account and also the balance could not sustain even larger lot sizes. So for now, you can see how being objective is very important. If I have been objective, I would not open the trade unless I have put the strategy on it, make some kind of analysis, put support and resistance levels, so I know where the price will move. Okay? Now the price is starting to reverse back down, so I am really happy that the price has done that. Am I objective currently? No, I'm not, because I am very happy that the price goes in my direction, so I hope the price will reverse and I will be in profit at the end, which will be very great. I will make money. But the price could easily go against me, wipe the entire account, my account, and being completely erased from trading, which is not very good. The goal is always to protect your account balance, whatever happens on each trade. That means putting a stop loss. Now, being subjective will usually lead you losing your account balance, because being subjective is something that you hope the market will do. You're not objectively seeing what's currently doing on the market. If I put resistance levels, for example, here and here, for example, here and here, also in here, I would see also, for example, I would put trend lines right here, where you can see the trend line could be right here and the trend line could be right here. So I would see how the market reacts. When the price goes against the trend, which means a smaller trend, this means that the market probably will not move down, it will move up, as it is in these 2 candles. That is something that, being objective, what the market shows you, it will do. So you act accordingly, objectively, not subjectively. These are very important things to remember on the market. Sorry, just a minute. Being objective, it means make the analysis based on the strategy and then open the trades accordingly. Being objective, and that means have strategy for your risk management. Do not open too large lot sizes on your trading, on these trades that you open, because you need to protect your account. Then being greedy will ultimately lead to your account balance being lost. You will lose money because being greedy will eventually lead to open more trades, to the overtrading, oversizing, open the trades with a larger lot size, opening too many trades, which means overtrading, and then ultimately you will open too many trades at a small too fast in the very short time, and then you will close them with a loss instead of waiting until the price reaches the target, which is objectively set. Now, it's not very easy to make the analysis, so I have created one of the videos where I explain to you how to make the analysis based on the support and resistance levels and supply demand zones. Check the watch list, the playlist I have on my YouTube channel, so you'll see how to make that. And based on that, you open the trades, how the market will move, and then you put also a stop loss, take profit, and put the risk on your trades. I hope this lesson will have explained to you what are two very important lessons here. Be objective and do not be greedy. Act accordingly what the market shows you based on the analysis you make, so you can also be a profitable trader. If you have anything regarding this lesson, feel free to leave a comment. If you think the lesson was great, please like the video and subscribe for new videos. And if you think this will be useful for other traders, feel free to share it with them. This is all for this video. See you next time and happy trading.